The market gaps up but can't hold on as the bulls face another test. Are they up to the task? This is Invest with Jacob. Okay, guys, so in last week's video, we were talking about whether Wave 4 had ended or we were looking for another push down into our blue box. And Friday was bullish and Monday gapped up before giving way to a pullback. And now the bulls face another test. The question is, are they up to the task? I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, as always, we are going to go over the results of our indicator. Not a great day trading day because the market was kind of trendy in the up direction before it turned over in the afternoon, but still a day where we found some awesome value, and I'll show you that as we jump in using our swing trading indicator. So for those of you that are new here, we created a trading view indicator. You do need a trading view account to get it, but it is absolutely crushing the market in day trading and swing trading, and we'll look at that right now. So let's jump into that chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart in trading view. Again, you need a trading view account. You need real-time data on the ES and NQ based on how we find these levels. And then you need our indicator, which is the IWJ Pivot Point Pro. And that I'll show you how to get here in just a minute. To the left in the yellow, that's pre-market. To the right in blue is post-market. We don't trade anything that happens here because, as you can see, it's very choppy and flat. It's not really a great trading environment. It's low volume, so it doesn't have the greatest reliability. We want to trade regular trading hours. And what we saw today was a buy right before the open, so we don't take it because it's not in regular trading hours. It was a good signal, though, as it did drive up. We got a sell here that got stopped out for a loss. And then we got a sell here that was a small winner. This drive down here was a small winner. And then it spiked back up, stopped us out before obviously rolling over and being a really good indication of a sell. It just happened to push up and get us stopped out. That happens sometimes. It's part of trading. But the sell signal was right. It knew there was weakness. It just was a little bit early, and sometimes that happens. Not very often on our indicator, but it is something that does happen in trading. We stop trading at 10 o'clock every day because in the afternoon the market gets choppy. There's too many overlapping events. You just don't get trends very often that continue through the afternoon. You can see the downside even got choppy here, and there wasn't any good trading, and that's the case most of the time. So we stopped trading at 10 because that is good trading practice, especially for day trading. Most of the strong moves happen earlier in the day. So not a great day trading day, but most days we do crush. If you go look at our last, I don't know how many weeks of videos, you'll see how good this indicator is overall. And we also have swing trading, and that's where we really found a diamond here. If you go over to the Micron chart here for our swing trading, Micron had been getting killed here off the top. It hit its all-time highs at about 157. And last Friday, we got a buy here as it comes up. This is the weekly chart now. We do use the weekly for our swing trading. And we wait till the close or just about the close of the week to make sure this buy signal is going to print, because what can happen is it starts off bullish. The buy signal comes up like, hey, this is bullish. And by the end of the week, it's down here in the red and this goes away. And then you got trapped in a trade you don't really want to be in. So we wait till close to the end of the week to make sure this buy signal is going to stay on the chart and print. Once it does, we get in the trade. And then on Friday, if you got in this trade at about $90, yesterday, 1 day later, you woke up and you could have got it at 101 or a 12% gain in 1 day. I do like to use the 21 as my first profit target, depending on where exactly the trade initiates. But from down here, that would definitely be the case. If you buy and hold, 1 day, 12%. If you're doing options, you absolutely destroyed this. You made a ton of money on options simply for waiting for the buy signal, getting in, and watching it run up 12 points in 1 day. Really, by the morning, you were here, and you still have this buy signal. So you should have taken some profit here, and it still has that runner for Micron to come back up and start running. Even if you go back in time here, you have this sell signal right off the highs. Remember, you have to wait till the end of the week. So the close of this candle was down here around 131, and they brought it all the way down here to $84 or a $50 drop that you could have had using our indicator. Now, are they all like that? Of course they are not. You had a buy here that was a little bit choppy, probably ended up being a loser. You had some you had a sell stop here. So you had a sell back here. This sell stop gets you in at 121. And when you get a stop, that means continuation of the trend. So you get back long at 121, and they rode it all the way up here to 133, so that was another $12. Then you got a sell stop here, so you got in at 130. That rode all the way up to 157, so that was another $26. Nailed it right there. So yes, you're going to have some losers in here. This sell was a loser. This buy here was a loser. But the winners are so big and so dominant that the losers don't matter, and that's what you want. You want really big winners, really small losers, and that's what you see here. A $50 drop here, a 12% win in one day here. This thing absolutely crushes it. It gives you the signals. All you do is sit back and wait. You don't have to look at 100 indicators. It is forward-looking price action trading. It is not waiting on a moving average that crossed 6 bars ago and now you're finally in way too late. It is happening in real time. It finds the low here, gets you in during the week of the low so that you can catch the next week's action of moving up. Same thing happens on the 5-minute chart. Guys, I want you to have this, and here's how you get it. There's a link down in the description. Click that link. It will take you over to our webpage. Once you're there, check out our TradingView Indicators page. It's under our membership plans, TradingView Indicators and Courses. It's $59 a month. Do you think that 12% in one day would have paid for this $59 for a few months? I think so. Do you think it'd be pretty fun to be in at the top of Micron there and get that $50 move down if you had options for a couple months? I think that would be pretty amazing, and that would pay for this really quickly. So $59 a month, and here's what I'm going to do because I love it so much, and I think you're going to love it too. It's a 30-day money-back guarantee. Get the indicator. Try it out for 30 days. If it's not what you want it to be, if it's not anything you like, simply shoot me an email and say, hey, this wasn't for me. I'll refund your money. You get access taken away, and we both go our separate ways. There is no risk whatsoever. You can even get this and just watch it for a month, and if you don't like it, get a refund and move on. So there's no risk to you to even try it. It is an incredible indicator. I want you to have it, guys. 30-day money-back guarantee. Really, you should check it out. Now, let's jump into the charts and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and we've been talking about this wave 4. Is it over, or do we need to come down into this blue box? I do think that they want to come down into this blue box and test it, or at least right above it here at about this 5,800 level. And the reason for that is the overall bigger structure. If we zoom out just a little bit here, you can see that this 1-2 setup is where wave 4s would typically target in a diagonal, and we are in a diagonal structure given the overall overlapping nature of wave 1 and 2 and 3. So we have all ABCs here. And wave 1 does top out at around 5,800, which is why that line is in there. It's a huge line of support. You'd expect wave 4s to come into wave 1 territory. Happens quite often during diagonals. So that is why we would look for it to come down a little further. Now the question is, what kind of structure are we looking at here? Is it possible that this is an ABC and done for 4? It is. And the reason we count it this way as a truncated C is because on all the other charts, the NASDAQ, the SPY, and the SPX, this low is lower than this low here, which makes it a more natural ABC, meaning that it can't be an A and a B start to a bigger move up on those charts because this came down below A. So with the ES being kind of in a funky spot here where they did not take out this low, we can call this a truncated wave C, where we'd look for an A, B, C in a bullish manner. And in this case, if it is going to be bullish, I do think the A wave will come into this area here around the top of this B wave, and then be a B and a C for this to be all of A, up into the highs here. And then I would look for one more pullback and then C up towards 6,300 plus, which is what we've been talking about for a while. Now, if that doesn't happen and we're going to fail down, I still think we go to 6,300. It's just a question of going from lower. So in that instance, we would look at this as A, B, and C, and then we'd look at this as B of 4, and then C of 4 into this blue box, or at least down in that 5,800 area. Then we'd look for an ABC structure back up into 6,300. That would take us to one more high, and after that, I would be very cautious on this market. Again, until support breaks, this is a bull market. We do look higher. There are higher targets. This structure is a little bit incomplete. I do think it needs another wave higher. And until we see that, I do think support will hold and the bulls will buy ultimately down in this blue box area should they break down. So I don't think a breakdown is leading to the top just yet. I think that we'll get bought and we have one more high into 6,300 plus after that. Over on the NASDAQ, so this is what I was talking about on the ES. The C wave comes down below A, which is more natural. And in that case, that means this can't be a C up unless this is going to be expanded B, which you can't have in a diagonal. So in this case, we would count this as either all of wave 4, where you have an A, B, C for A, and then a B and a C after that. Or we would call this the A wave down here. So you'd have A, B, C, and A like you would on the ES. A, B, C of A, B wave, and then a C wave down toward the 20,400 area. And really what has to happen on the NASDAQ is if they do start to break down, they have to hold this 20,100 area. This wave 2 low right here. Diagonals cannot have a wave 4 lower than wave 2. So that would be a must-hold area to keep this bigger structure alive and bullish. I do think that is the case, as it does need another high to complete the overall structure. It would look a lot better anyway with that, with another high to the upside. So this is why, guys, because we're dealing in big diagonals, this is why we have less certainty in the pathing, because everything is an ABC structure up or down. And without the differentiator of impulsive waves, it makes it a much more challenging pathing option when you're dealing with everything looking the same. And the reason for that is Elliott is built on impulsive and corrective waves. So you have an impulsive wave that's 5 waves, then you have a corrective wave that's 3 waves. When you see this structure, it's very, very reliable to say the next thing we should see is a smaller 5-wave structure for 1 of 3, 2, and then a breakout. That is a very common Elliott wave structure, very easy to see, very easy to decipher. When the market's doing that, it's super simple. When the market is in diagonals, you don't get any 5-wave structures. You get wave 1 is 3 waves, waves 2 is 3 waves, waves 3 is 3 waves, 4 is 3 waves, 5 is 3 waves. And so everything overlaps, which makes day trade or swing trading very difficult. Everything looks corrective, which makes figuring out if you're in an impulsive or a corrective wave. And it really makes it hard to understand if you're going higher or they're going to reject and come back lower to reset. So it's been a challenge. It always is when you're dealing in diagonals, but that's not anything we're worried about. We've still pathed this very well. We still understood that they were likely to buy this area. That's why I have this black line of support here. They bought it twice now. We still understand that if they break down, they're very likely to buy this area down here as well, because we can identify diagonals, and once we do, we can start to path them out correctly. So remember, the market is emotional and moves on sentiment. Nobody cares about fundamentals. Nobody cares what the Fed says. Nobody cares what inflation is. In the big picture, they do. Don't get me wrong. But the market's going to do what the market's going to do, and it already knows the news before you do. That's why the news cycles mean nothing. It's designed to trap you and make you emotional, and that's why I get the YouTube comments I get, which crack me up, that guarantee me the top is in or the bottom's in or whatever stupid thing people say because they saw one day of down action. They don't understand how markets work. So overall, just remember when you're trading, this is a very challenging market to trade, and that is when, and when you think it isn't, that is when you get trapped, and that is when you blow up accounts. So just be careful. Understand that there's definitely downside potential here into the 20,400 area first, then up, but I do think 23,000 overall will happen one way or another. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial because I want you to get in there. I want you to love it, become part of our trading team, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. Our Elliott Wave 4 beginners and our advanced Elliott Wave courses make sense of this emotional market. They teach you how to find the key levels. They teach you how to understand things like diagonals and double and triple threes and flats and everything else. And they help you make sense of these crazy markets. In the advanced course, we're going over the stuff we're talking about right now. We're going through triangles. We're going through double and triple threes, flats, diagonals, everything that you've seen, we go through in a very in-depth level. These are bite-sized videos. They're about 10 minutes each so that you can understand how these markets work. As you can see on the screen, it's helping our traders make money and understand the market. But if this is new to you or you're just getting started, you can check out our Elliott Wave 4 beginners course, because this course is helping real traders make real money and finally understand the market in a way that makes sense. It's so confusing when good news makes the market go down and bad news makes the market go up. This is because Elliott knew that the news cycles didn't matter long ago. He knew that key levels did. He knew what happened when those key levels held and what happened when they broke. This gives you a huge trading advantage over the rest of the market. In this course, we have 25 videos where we go through your introduction. We go through your mindset and emotion, the KISS method, and why this works, the chart setup and tools, all the tools you need with Elliott Wave Theory, how to use them and why, and the Elliott Wave 4 beginners area where we go through each of the waves, how to find their key levels, theory, corrective depth theory, theory of alternation, the pivot, everything you need to know to make sense of an irrational market. Now, the cool thing is if you want to get these plans at a discount, we have our bundle pack for $37 off. But if you want to get them for free, check out our monthly rooms because they are included in these prices. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through all of the charts, what to expect, all of their counts, all of the different symbols you want to see. And that alone to me is worth the price of admission. You also get the training material, the beginner's course and the advanced course. And we day trade and swing trade, so we do trade quite often in my room. Now, if you're looking for individual stocks, futures trading, income trading, or advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, income trading, and his reduced risk binary method that gets you in at a cheap price and gets you big multiples on your money. It's how he structures that trade that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. Pretty simple. We're looking for either the bears to follow through and break down here and give us a move into this blue box in a C wave, or we're looking for a smaller breakdown and then a C up for A, B, and C into that 6,300 area. Over on the NASDAQ, we are looking for the bears to break down and continue. If that's the case, we're looking at the 20,400 level next, and they must hold 20,100 on the NASDAQ. If the bears cannot follow through, we would look at this as a B and a C for A, and then a B and C overall towards 23,000 plus. Guys, that is your market update for today. I'll talk to you tomorrow.